If you're a Singaporean or Malaysian investor thinking hard about where to park your money, you've probably hit the age-old portfolio dilemma. Sure, bonds are safe and give you steady income, but maybe you want something that's truly ethical or lines up with your faith. Most people, when they hear Islamic bonds or Sukuk, brush it aside, figuring it's too niche or just for Muslims. Honestly, that's a mistake, and it could be costing you stability and credibility in your portfolio. In the old days, people believed you had to sacrifice returns for conscience. You'd look at a conventional bond paying, say, 5.6% and assume anything ethical would give you less. But the real scoop, dismissing Sukuk means you might be missing out on a trillion-dollar asset class, fully supported by the Singapore government, with distinct advantages like diversification and real downside protection, even for regular investors. Let's cut through the noise, because headlines rarely tell the real story. I'm Iggy, based in Singapore, and my goal is to dig deeper than the surface, to show you what truly matters for your CPF, SRS, and SGX portfolios. Over the past year, the Investing Iguana has put out over 1,200 videos and clocked more than 600,000 watch hours. We landed 8th in Tiger Broker's 2024 Influential Tigers. Not by accident, but by consistently focusing on uncovering value in both local and global trends. Today, I want to walk you through exactly why Sukuk aren't just a fancy term. They're an essential fixed income asset for any stability-minded investor. Let's start with the core difference. Conventional bonds set up a lender-borrower relationship. You lend, you get interest back, and your bond is just a debt obligation. You're an unsecured creditor. Sukuk flips the script. When you buy Sukuk, you actually own a share of a physical asset. Think real estate, infrastructure, commercial property. Your return isn't interest, but rent or profit sharing from the thing you own. That's a structural difference we can't ignore. In tough times, owning a piece of a tangible asset gives you better recovery prospects than just holding a slip of paper saying you're owed money. Now let's layer in the ethical and social protections. Every Sukuk has to comply with 3 Sharia principles. First, no riba, no interest. Your returns come from real business, not time value of money. Second, no gara, no excessive uncertainty. Investments are meant to be straightforward, filtering out high-risk speculation and complex derivatives. Third, exclusion of haram industries. You can't invest in alcohol, gambling, tobacco, weapons, or regular financial services. There are strict financial screens too. Issuers must keep debt to market cap below 33% and haram income under 5% of revenue. For investors using CPF or SRS, these filters act as a sophisticated form of socially responsible investing. It's built-in asset quality and risk management. Let's tackle the big question. Does investing ethically mean losing out on returns? Numbers show Sukuk yields are right in line with conventional bonds of similar quality. For example, the Franklin Global Sukuk Fund offers a yield to maturity of about 5.98% with A- credit, while MAMG Global Sukuk Income I comes in around 6.21%. Plus, during market chaos, Sukuk have been shown to be less volatile than regular bonds. Why? Because their value is tied to real assets, which act as a buffer against market swings. But as always, let's talk risks. Sukuk aren't risk-free, they're just structured differently. Asset-backed Sukuk give you true ownership of assets, with direct recourse if the issuer defaults. Asset-based Sukuk are more common. They give you beneficial ownership, but in a default, your claim is more like a regular bond, unsecured. For retail investors using diversified funds, focus on the fund's overall credit quality and balance. Knowing the difference helps you understand whether you've got deeper protection or not. So, how do you get started if you're in Singapore? Good news? The MAS set up a formal Sukuk framework back in 2009, giving them the same legal and tax treatment as normal bonds. You can get exposure through platforms like Poems, FundSupermart, Saxo, or the brokerage arms of DBS, OCBC, and UOB with iTrust accounts. Your choices fall into 3 main buckets. Government-backed sovereign Sukuk gives you safety and regional diversification. Diversified funds like Franklin Global Sukuk and MAMG Global Sukuk Income I offer access to a managed basket, and Global Sukuk ETFs let you buy liquidity and broad exposure at a low cost. And there's also a massive ESG tailwind here. Singapore's drive to be a hub for both Islamic finance and sustainable investing means the global sustainable Sukuk market hit USD 13.4 billion in Q1 24. Incentives from MAS, like the Sustainable Bond Grant Scheme, are making green sukuk a reality, combining ethical returns with real market demand. So what does all this mean if you're trying to build a strong future-proof portfolio? Here's my clear assessment. Sukuk offer genuine asset backing, competitive yields with lower volatility, built-in ESG screens, and full support from Singapore's regulatory system. On the flip side, individual Sukuk certificates can be less liquid, but diversified funds solve that. And be mindful, asset-based Sukuk still carry issuer risk, so check the details and use SGD hedged options if you're worried about currency swings. Valuation-wise, it's all about yield to maturity versus underlying credit risk and structural protection. Funds in the 6% yield range with solid asset backing present an attractive risk-adjusted return. Here's my bottom line. This is not a niche play. The Sukuk market has topped $1 trillion globally. If you already own them, hold. If you're new, start small. Grab an MS Sukuk if possible, or choose a diversified SGD hedged fund. Track the results over a full market cycle and scale when you're ready. If this analysis helped bring Sukuk into sharper focus for you, and you want to stay ahead on these kinds of frontier topics, subscribe to the Investing Iguana's Substack newsletter. The community is growing with 1.3 million reads, 65,000 likes, and loads of premium members backing this independent research. Hit the like, subscribe, and bell so you never miss an update. Thanks for watching. See you in the next one.